Okay, so hello my dear students. So welcome to another discussion for accounting for business combination. So this lecture is actually a continuation for accounting for stock acquisition, date of acquisition. Okay, so in this discussion, we'll be discussing how to prepare a worksheet and discuss some working paper eliminating entries needed to prepare a consolidated financial statements, particularly consolidated statement of financial position or balance sheet at the date of acquisition. But in this video, we shall be focusing on 100% owned acquisition, okay, or yung parang wholly owned subsidiary. No, this happens when the parent or the acquirer purchases all the outstanding shares of the acquiring or the subsidiary. Okay, so we have here our first illustration. No? So, peer company acquired all of Sky Company's outstanding stock on January 1, 2014 by paying 340,000 cash and immediately prepares a consolidated balance sheet. Okay, so the separate balance sheet of the two companies immediately before the consolidation with acquirer's fair value is as follows. Okay, ito yon. So we have here the separate or the FS of peer company before the acquisition, and then also the FS or the balance sheet of Sky Company before the acquisition, also the fair value of the assets and liabilities of Sky Company, no, at the date of acquisition. So take note that si peer yung parent, tsaka si Sky yung subsidiary or yung acquirer. Si peer, tsaka si acquiring naman si Sky. And also, you take note some differences in the book values and fair values of some assets and liabilities of the acquiree, si Sky. Okay, so we have here, no, yung inventory natin is undervalued by 15,000, undervalued. Yung land naman natin is undervalued by 60,000, while yung building and equipment natin is overvalued by 10,000. Okay? Also, yung bonds payable natin is undervalued by 35,000. Okay? So first, we shall be computing for the goodwill, no? So to compute for the goodwill, simply that's the consideration transferred less the fair value of your net assets. Okay, the fair value of our net assets, so basically that's 565,000 less na total assets less 235,000 na total liabilities, no? So in this case there is no non-controlling interest kasi diba it's 100% acquisition, so mag non-controlling interest lang man tayo if it's a partially owned or acquisition less than 100%. Okay, so yan, so yung goodwill natin is 10,000. That's consolidation transferred of 340,000 less our fair value of our net assets, which is 330,000. No, that's the difference between the assets and liabilities at fair value. Okay, then we have a goodwill of 10,000. Okay, so how would the parent or peer company record acquisition? So the record acquisition, of course, it will be debited to an investment account. That would be investment in Sky Company, no? Or investment in subsidiary, no? Amounting to 340,000. Then, of course, mag-credit ka ng cash for 340,000. Okay? Yan yung pag-record ng acquisition natin kay Sky Company. Okay, so after the acquisition, so if we prepare immediately a consolidated balance sheet or consolidated statement of position, we shall prepare a worksheet. No? Okay, so we have here the worksheet, no? So we have here the separate FS of peer company and also the separate FS of Sky Company. Okay, so first here, yung FS ni peer company, actually, already reflected yung acquisition, 'di ba? Kasi yung entry natin with debited investment in Sky, credit cash. So yung cash natin from 350 naging 10,000 na lang kasi 340 man yung acquisition. And also, 'di ba, we've debited investment in Sky Company amounting to 340,000. Okay? So yung first eliminating entry natin, no, yung first eliminating entry natin. So, our first eliminating entries is to eliminate investment against stockholders' equity account of Sky Company. Okay, so, ngayon, ang gawin mo lang is just to debit the equity accounts of the subsidiary, which is Sky. So, debit ka ng common stock, debit ka ng additional paid-in capital, amounting to 20,000, debit ka ng retained earnings, amounting to 80,000, and credit ka ng investment in Sky Company for 300,000. Ang i-credit mo na investment in Sky Company is equal to the book value, no? The book value of the Sky, which is 300,000. Okay, so to reflect that in your working paper, yun yung first eliminating entry natin, i-reflect mo yung working paper, dito siya, no? So, 'di ba, ang debit natin is to eliminate, no? Eliminate the equity account, no, of the subsidiary, na that's 200,000, 20,000, 80,000. Of course, nag-credit tayo ng investment in Sky Company at 300,000. Okay. Our next eliminating entry is to eliminate investment against allocated excess. Okay, so di ba we have difference, may mga accounts na nag-defer yung fair value, defer yung fair value and book value date of acquisition, no? So to recognize, the second entry is to recognize, no, the difference of the fair value and the book value of the assets and liabilities of the subsidiary existed at the date of acquisition. So we have recognized, no, i-recognize natin yung undervaluation ng inventory, which is 15,000. Also, the undervaluation of land, that's 60,000. And then yung undervaluation ng overvaluation ng buildings and equipment, and then undervaluation ng bonds payable. Since the fair value of the bonds payable is greater than par, so yung difference kasi nga undervalued, so will be credited to premium on bonds payable. Okay, so that's 35,000. And then to completely eliminate the investment account, since yung investment account natin may balance na 340,000, no? Dapat to eliminate that one, so may excess pa tayo na 40,000. So this is actually the excess of the cost over the book value. Kasi yung cost natin is 340, then yung book value natin is 300, so may excess pa yun na 40,000, no? Then sa excess na 40,000, ay determine natin yung if may undervaluation ba and overvaluation of the assets and liabilities to actually determine the goodwill. Okay, no? So in the second entry, we just have to actually recognize the undervaluation and overvaluation of the assets and liabilities. Then we'll eliminate para investment account, and then to recognize the goodwill on acquisition. Okay, that's our second eliminating entries. And to plot that in our working paper or worksheet, no, for consolidated balance sheet. So yun siya, yung inventory natin was debited 15,000, yung land was debited at 60,000, yung buildings and equipment was credited at 10,000, and then yung goodwill natin a debit ng 10,000, and then yung premium on bonds payable natin was credited at 35,000, and yung investment account natin was credited at 40,000. So this will be our ito yung working paper eliminating entries, no, na na-plot natin sa ating worksheet. Okay, so after we've prepared the worksheet working paper eliminating entries, no, and plotted that in our worksheet, so i-prepare natin yung consolidated column of your worksheet. So yung consolidated column is actually the sum of the book values, no, of the two separate FS, yung separate FS ni Peer at saka kay Sky. So and then to i-take effect lang natin yung working paper eliminating entries. So the purpose of working paper eliminating entries actually is to eliminate investment account, diba? Eliminate investment account and recognize the undervaluation and overvaluation of your assets and liabilities and to recognize goodwill. So, kasi, diba, in the consolidated figures or consolidated financial statements, ang pagka-record natin is that book value ni acquirer, at saka fair value ni acquiree, no? So that's why in our working paper eliminating entries, we've recognized the undervaluation and overvaluation para ma-recognize natin yung fair value. Kasi in the separate FS of Sky Company, it was recorded at book value. So therefore, if we prepare consolidated financial statements, it should be at fair value. It should be at fair value. That's why every time we prepare consolidated financial statements, i-recognize natin yung undervaluation, overvaluation of the assets and liabilities. Okay? Para pag-consolidate, at fair value na yung accounts ni acquiree. Okay? So, for the consolidated column of our worksheet, so we just have actually gawin natin is just to add the accounts, no? So yung cash ni Peer plus cash ni Sky, that's 60,000. So wala mang entries for cash, no, in the working paper, no, that's 60,000. Yung accounts receivable natin, that's 75 plus 50,000, that's 125,000. Yung inventory natin, that's 100 plus 60 plus 15, that's 175,000. Then yung land natin, that's 175,000 plus 40,000 plus 60,000. It's actually 275,000. Yung buildings and equipment natin, that's 400 plus 300,000 minus 10,000 kasi credit, that's 690,000. So yung goodwill, recognize goodwill, nag-debit tayo ng 10,000, it's 10,000. And then yung investment in Sky Company, so dapat ma-eliminate yan siya, no? In the consolidated column. Then, yung accounts payable natin, that's 100,000 plus 100,000, that's 200,000. Yung bonds payable natin, that's 200,000 plus 100,000, that's 300,000. Then yung recognized premium on bonds payable in our eliminating entries, that's 35,000. That's so consolidated, that's 35,000. And then, diba, we have eliminated the equity account of the subsidiary. Therefore, ang ma-forward na equity accounts in the consolidated column is kay kay parent or kay peer. Yeah, that's 500,000 of common stock, paid-in capital excess of par na 50,000, and retained earnings of 250,000. Okay? So, therefore, no, we have here the consolidated column, that's total assets. We have 1,335,000 and total liabilities, stockholders' equity amounting to 1,335,000. Okay, so in our consolidated column of our worksheet, we can actually prepare a consolidated balance sheet. No? So, yun siya. So, if we prepare consolidated balance sheet, as of the date of acquisition, no, you may refer to the consolidated column of your worksheet. Okay, that's, diba? Our total asset is 1,335,000 and total liabilities and shareholders' equity, that's 1,335,000. Okay, so ito yung presentation natin for the consolidated balance sheet. So, mas easy siya, it would be easier, no, if we prepare worksheet. Then, para mas madali na din mag-prepare yung working paper eliminating entry. Okay? So, we have here another illustration. What if a subsidiary has a recorded goodwill at a acquisition date? Okay, so using the same illustration, in illustration 1, example that the consideration transferred consists of 240,000 cash and 10,000 common shares of peer corporation with a fair value of 12 pesos per share. So the following costs were incurred. Thus we have indirect cost amounting to 10,000 and cost to issue and register stock 7,000. So okay, so ang changes lang kasi may changes sa fair value ni Sky, book value and fair value ni Sky kasi what if daw may existing goodwill si yung acquiree. But wala naman kasing walang fair value kasi 'di ba yung goodwill kasi 'di ba in business combination we only recognize identifiable assets, and that does not include goodwill. Okay, so the computation of our goodwill, that's actually 'di ba consideration transferred, that's actually cash, that's 240,000, and then the fair value of the shares, that's 10,000 times 12, that's 120,000. Okay, so the total consideration is 360,000. Then we have the fair value of our non-assets, our net assets, diba? That's the difference between the total assets, the 560,000, that's 235,000 na non-current assets, 235,000 na liabilities, That's 235,000 liabilities. So we have a net assets of 325,000. Okay, so therefore we have a goodwill of 35,000. That's the difference between your total consideration less the fair value of your net assets. Okay, so to record acquisition, kasi diba our consideration transferred is cash amounting to 240,000 in yung common stock at that's 10,000 shares at 12 fair value, at may par value tayo na 10. Okay, so to record, of course, mag-debit ka ng investment in Sky Company, that's 360,000. Credit ka ng cash for the consideration na cash, and then common stock at par, that's 10,000 times 10. That's 100,000, and then yung difference between the fair value and the par, that's 2 pesos per share, that's 12 per share na fair value minus par na 10 times 10,000 shares, is actually 20,000. Okay, so then to record the acquisition related cost, i-debit lang natin sa retained earnings, and then mag-credit din tayo ng cash for 12,000, and then for the acquisition stock issuance cost, i-debit lang natin siya sa paid in capital or APIC, in excess of par, and credit tayo ng cash for 7,000. Okay? Okay, so in our worksheet, so we have here the separate FS of peer company, di ba? Immediately after the acquisition. So, we've noticed that we have investment in Sky Company, that's 260,000. Then yung cash natin, that's net of the acquisition related cost, stock issuance cost, and net of the cash na consideration, that's 93,000. And also the effect of the entry for the acquisition and the acquisition related cost is already reflected in the separate FS of peer. We also have the separate FS of Sky Company at book value. So, diba, our first eliminating entries is to eliminate investment account against stockholders equity account of Sky. So, same kanina, So, i-eliminate natin, diba, ang purpose natin to for elimination or eliminating entries is to eliminate investment account and equity account. Investment account of investment in Sky Company, no, that's 300,000, no, i-eliminate natin siya against the equity accounts of the subsidiary, no? Okay? And then, di ba, our second working paper eliminating entry natin is to eliminate investment against allocated excess. Okay, so since the investment in subsidiary has a balance of 360,000 and we have 300,000, no, na credit at the first entry. So therefore, our second entry is or yung excess natin, kasi yung consideration natin is 360, less book value na 300,000. So excess natin na 60 is eliminate in our second entry, no? Then, in our second entry also, we should recognize the difference between the book values and fair values of the assets and liabilities, or the undervaluation of the undervaluation or overvaluation of assets and liabilities at the date of acquisition of Sky Company, no? So, yan, recognize natin yung undervaluation ng inventory, undervaluation ng land, overvaluation of buildings and equipment, and undervaluation of premium on bonds payable. Okay? Therefore, since, di ba, may goodwill na kasi, our goodwill is 35,000, but since the subsidy has already has goodwill of 5,000, so we'll recognize na lang 30,000 in our eliminating entries. Okay, so the effect of the eliminating entries natin on, no, is i-plot natin, no, yung eliminating entry i-plot natin sa worksheet, no? So yun siya, so inventory 15,000, land 60,000, bills equipment na 10,000 credit, tsaka goodwill 30,000 na debit, and yung investment in Sky account natin is credit na 60,000, and then yung premium balance payable natin is credit na 35,000. Okay, so for consolidated column, again, we'll just have to add the balances of Pair and Sky, and then it-take effect lang natin yung working paper eliminating entries. Okay, so that's this is actually the consolidated column, huh? Diba? That's total assets of 1,438,000 and then total liabilities and equity of 1,438,000. Okay, so from your worksheet, you can now prepare your balance sheet at the date of acquisition. Okay, so that's 1,438,000 na total asset. Is actually same with your, diba? Same with your worksheet na 1,438,000. And then also we have total liabilities and shareholders equity of 1,438,000. So yung balance sheet is actually mag-refer ka na lang sa yung worksheet, particularly sa consolidated column. Okay? So for last illustration, for 100% stock acquisition, no? So what if daw may bargain purchase gain tayo? Okay, so using this illustration, in illustration 1, except that peer company acquired issued shares of Sky Company given exchange of 20,000 shares in peer company with a fair value of 14 per share. So ito daw siya, no? So yung consideration natin, so that's 20,000 shares, pero ang fair value niya is 14. So, at acquisition date daw, Sky has an unrecorded patent with a fair value of 20,000 and a contingent liability with a fair value of 15,000. So, this contingent liability relates to a loan guarantee made by Sky Company, which does not recognize a liability in its records because it does not consider it could be measured reliably, no? Okay, so to compute actually for the goodwill, no, or gain, actually this gain on acquisition, so we have here consideration transfer, that's 280,000. That's actually the 20,000 shares, 20,000 shares times 14 per share, that's actually 280,000. Okay, and then i-deduct natin yung fair value for net assets. So yung net assets natin, that's total assets at 565,000, then total liabilities na 235,000, plus yung unrecognized patent at 20,000, less yung contingent liability or unrecognized liability natin na 15,000. Therefore, we have a 335,000 as our fair value of our net assets. So since the consolidation transferred is less than the fair value of our net assets, may bargain purchase gain tayo amounting to 55,000. Okay? Okay, so to record the acquisition, since the consideration natin, that's 20,000 shares at 14 per par. Okay, so mag-credit lang tayo ng common stock. That's 200,000. So that's actually at par. That's 20,000 shares times 10 per par. That's 200,000. And then, of course, the excess should be credited to the additional paid-in capital or paid-in capital excess of par. That's 4 per share times 20,000. 4 kasi 14 yung fair value. Then yung par is 10 times 20,000. So you have 80,000 as your additional paid-in capital. So, our end would be a debit to investment in Sky Company at 280,000, credit common stock at 200,000, paid in capital in excess of par at 80,000. Not to record the acquisition of Sky Company. Okay. So after the recording of the acquisition, of course, ito na yung yung records, no? 'Di ba? So, you've debited investment in Sky Company at 280,000. And of course, yung effect niya will be a credit to common stock and then additional paid-in capital. So, ito na yung separate FS tier. As also the book value of Sky or the separate FS of Sky. Okay, so, in our working paper eliminating entries, diba? So, the purpose of our working paper eliminating entries is to eliminate investment account, diba? And capital account and to recognize bargain, diba? Mag-recognize tayo ng bargain. Okay, so your first entry, okay? Our first entry, diba, is to eliminate investment account. So same entry kanina. Debit ka lang ng capital debit ka mo lang yung equity accounts ni Sky, yung subsidiary. Then i-credit mo sa investment account. So since the consideration is 280,000 and then the investment in Sky account nag-credit ka ng 20,000. Therefore, after the first entry, yung balance niya is negative, no? But in the second entry, no, just to eliminate the investment account, mag-debit ka ng 20,000. No? Okay, so our second entry is to recognize bargain. No, recognize bargain, and then establish or recognize the undervaluation and overvaluation of the assets and liabilities. So, that's inventory at 15,000, land at 60,000, patent kasi we have unrecognized patent of 20,000, then buildings and equipment 10,000 credit, no? Estimated liability for contingency, diba? That's 15,000, okay? And also premium bonds payable of 35,000. So there. And then, i-recognize natin yung retained earnings, yung bargain natin. So, i-close natin siya sa retained earnings amounting to 55,000. So, that will be our working paper eliminating entries. So, if we've, if we've plot that in our worksheet, so, diba? So, yung effect ng first entry is to eliminate the investment equity account against investment account. And then, yung effect ng second entry is to recognize bargain. It's actually addition to retained earnings. Then, the effect of the undervaluation, overvaluation of assets and liabilities. Okay, so you have here your consolidated column. Again, that's the sum of accounts of peer and accounts of Sky, plus or minus the effect of your working paper eliminating entries. No? So, after that, after you've determined the consolidated column of your worksheet, no, then you can now prepare a balance sheet, no, as of the date of acquisition. Okay? So, take note that we don't have a goodwill kasi nga bargain tayo. So, yung total assets natin is actually same with the total assets in the worksheet. Okay? And also the liabilities and shareholders equity. Okay, so that's it. So, that's the worksheet, no, for the um, consolidated financial statements. Okay, so see you on the next discussion. Kasi in our next discussion natin to discuss the working paper and eliminating entries and then for partially owned acquisition. Okay, so thank you.